Alright, okay, good evening everyone. Welcome to today's stream. Okay, so we have a special session for this month. For the entire of this month here, every Sunday evening we'll be running a weekly market outlook session over here. Okay, so this is actually sponsored by FXBT. Now, if you are fairly new to FXBT, they are also currently running some promotion. I'll talk a little bit about that in a while. But since this is the very first time we're running it on Sunday in the evening, okay, just want to give you guys a heads up. Moving forward for this month, we'll be having this session every Sunday evening. To kind of prepare you for the week ahead, I'll talk about the market outlook, what are some of the opportunities to keep an eye on, and also to update you guys that we do have two educational webinars coming in this month as well that we'll be having on Saturday. Okay, so one is going to be talking about how to identify directional bias using the principles of Elliott wave. And then the other session that we'll be talking about is going to be covering on how to identify our entry setups. Okay, the strategy is going to be based on order flow. Okay, so these are all going to be conducted over the weekend. So do mark your calendar if you'd like to actually join us for this month. Okay. So great. We'll get started. The idea of this session here is at the first part, I'll walk you through the market, okay, and then we'll open up for Q&A as well. So if you have any questions regarding the market, you would like me to go through any analysis that I may not have covered at the first part of the session, feel free to put it into the chat, let me know, okay, and then from there on, I'll be able to look at them and then share my insights with you, okay? So great. With that housekeeping done, we'll get started. So quick disclaimer, everything that I'm covering over here, of course, they do not directly constitute to any sort of financial advice or trade idea signals directly. They are meant for educational purposes, and of course, they do not take into account your personal risk management principles as well, okay? So just want to have everyone being aware. Things that I'm covering over here are from my personal point of view, but of course, hopefully that give you some ideas and insights for the market. Okay, now I'll very quickly talk about what has happened over the week first, right, before we jump into the new week. So last week was pretty interesting. We have a couple of I would say pretty interesting development in the market. First up, of course, we have the Bank of Japan. You can see that they had decided to hike rates, which is a little bit of a surprise because the general consensus here was that they will maintain rates, but Bank of Japan BOJ actually hike it, and we did see the yen actually strengthening further. Right now, if you ask me, from a longer term perspective, will the yen continue to strengthen going to the end of the year, going into next year? The answer is definitely yes. Right. So from a fundamental perspective, the yen, the Bank of Japan is definitely in the hawkish tone. Okay, and any sort of opportunities, if you're looking at slightly mid to long term opportunities, you want to be looking at ways to get involved in buying up the yen, right? Because fundamentally speaking, the yen will continue to strengthen. Now, last week we also have the FOMC, but there's not much of a movement. Basically, they maintain rates over there. But Bank of England came in and decided to cut rates, right? I mean, not a surprise, but basically they decided to cut rates. Okay, so moving forward, obviously the pound, if you compare it against the yen, okay, we're gonna start to get very nice little fundamentally clear direction, right, where one bank is hiking, the other bank is cutting. Okay, so if you compare like Bank of Japan and Bank of England, the pound here fundamentally will be slightly weaker as it continues to cut rate, and then of course the yen will be fundamentally stronger relative to the pound if the Bank of Japan continue to hike rate, right? So if you pair pound yen together, moving forward, we're likely gonna get a very clear trend environment supported by the fundamentals, right? So that's something you want to keep an eye on. Okay. And to end off last week, we have the NFP, right? And of course, NFP, you can see here the data coming in from the US side is worse than expected. Okay. And that actually put a lot of pressure on the dollar index in general. And we did see the dollar actually drop, okay, pretty drastically. Because this one here is pretty bad, right? I mean, if you take a look at unemployment rate, it's going up, okay, from 4.1 to 4.3. And very likely that if this trend of unemployment rate rising is going to continue, there's a very good chance that we'll see a potential recession going into 2025. Okay, and the fear of that would actually put pressure for the Fed to actually start considering cutting rates. Okay, of course, the FOMC actually happened before the labor market data came out. Okay, and prior to the labor market data, FOMC actually state that there's a possibility they will cut rates potentially in September, which is next month. And I think with a negative data coming in for labor market, there's a very high possibility we'll see maybe the cut coming in set. Okay, so that actually put pressure, as I mentioned, on the dollar itself. And if you ask me, going into next week, we'll probably have a slight bias towards the dollar continue to weaken. Okay, at least for the near term. Right, so that's a quick summary on what has happened last week. Now, if you jump into what's gonna happen next week, okay, we have a couple of important news here. Not so much on the dollar related, right? So that's where I'm looking at a perspective where there's a very good chance the dollar would actually continue its momentum to the downside, right? The sentiment is going to continue bearish, carrying forward from what happened last Friday. But this coming week here, we have some important ones, including the RBA, as well as the Canadian labor market data. Okay, so this coming week here, there's not a lot of very, very significant data. But two of this definitely you want to be aware of, right? One is RBA. The other one is going to be the Canadian labor market data. Right. So with that said, let me jump into the charts over here. Okay. To cover some of the technical outlooks. And as I mentioned, if you guys have any questions, any particular instruments that you'd like me to talk about that I may have missed out, okay, feel free to just comment in the chat, and I'll keep watch on that. Okay. So I'll start off with the dollar index. Okay, so this little move here that you see, okay, is basically post NFP, right? That's where the dollar weakness comes in. Now, I wouldn't just jump in and decide to sell, because from a technical perspective over here, we are currently still testing the zone, which is a key area from this move, right? This cycle here, W, X, and Y. Okay, and of course that is also where we can see very clearly in black, right? 1, 2, 3, 4, 5. Now there's a good chance that the market will react off this area and perhaps starts to give us some sort of a bounce. Whether is it going to be a bounce as a retracement or an impulsive move which continues its bigger trend in the upside, it's a little bit too early to tell. But definitely, I wouldn't want to just be selling immediately because of last week's movement. Okay, so with that said, I'll be keeping a close watch of how the dollar is going to react off the zone to make a decision as to do we want to be focusing on the buy or do we want to be focusing on the sell. Okay, so right now, it's more of a neutral bias. I will give it maybe a couple of good days, see how the dollar index is going to react from this point before we decide to buy or sell. Now, if we get an impulsive rejection back up, right, so kind of like a nice little bounce, okay, then obviously we'll be expecting the pullback or potentially the dollar strength may come back. However, if this is gonna just do a slight slow corrective pullback, okay, there's a good possibility this will actually see more downside, and with that, then dollar may actually retest its recent bottom around 102.40. Okay, so we'll see how things goes from here. Right now, Okay, that's the take on the dollar index. Now, if you translate that to euro dollar, okay, let me just very quickly update some of this analysis as well. Okay, I would shift this to a bullish bias with what happened last week on NFP, of course, from a fundamental point of view and a technical perspective. There's a good possibility we'll see the euro dollar extend a little bit more, okay, towards the top of the channel, right? So same thing here, you can see the market is essentially forming a three-wave cycle. Okay, I mean, let me just hide that 1, 2, 3. The three-wave cycle is essentially from here. First move up, second move down. This one here potentially doing something like that, right? So the internal of that is going to be a three-wave cycle as well. 1, 2, 3. Okay, so overall, we are expecting more upside from what happened last Friday, right? Very impulsive move. So euro dollar, we're going to be bullish bias, and the take here is if we can get a corrective pullback, we have a potential buy trade opportunity as long as price stays above 1.0775. Right, so that will be the outlook of things, right? So any sort of a corrective pullback here going into next week would definitely be opportunities that we can look out for buy trade, right? With a target at about 1.0980. Right? If I zoom in a little bit, right, in terms of like a setup here that you can primarily look into. Okay. So from an order flow perspective, H1 time frame, very clear break of structure, right? Doesn't matter which swing point you take, the impulsive move itself actually break a lot of all these points, right? Even here you can see, you know, doesn't matter which swing points you take, it's a very clear break of structure. Okay, so a break of structure essentially is like a sign of a trend shift, right? Because that's a swing high, the market actually break and close above it. So that would put us in a bullish shift, right? Initially, the market is printing lower low, lower high, lower low, lower high, lower high, lower low, and then at one point in time, this move itself break this high. So from an initial bearish momentum, we are now shifting bullish, right? So that's what the break of structure really means. Now, on top of that, we also have a very obvious fair value gap zone. Okay, when the market creates a huge momentum. So this one here is what we call a fair value gap. Okay, allow me to just very quickly put this out. Okay. Right, so that's a fair value gap, right? So the idea of a fair value gap is kind of like telling us that the momentum to the upside is strong, okay, and oftentimes the price would tend to pull back towards this area, okay, before the continuation itself. So what I'm looking at is obviously not just kind of like, you know, buy when the price comes in the fair value gap. We can also add in layers of analysis where we have this as a order block. Okay, so why is this an order block? Because what we can see here is the market actually made a push up. It came down a little bit. It went up. There's a bearish candle before that huge momentum move, right? So that tells us that there's really quite some demand coming in around the zone. So the idea is if the market were to pull back, right, the first area that we may see a reaction is going to be at a fair value gap. But if let's say there's an initial reaction but the market doesn't really go far, then there's a good odds the market will come back down towards the demand zone for the next push up, right? So when we start to see things like that, we can obviously also use a little bit of Fibonacci kind of confluences, okay? to take our trade. Right. So when we look at it from this perspective, right? Okay, we have an order block here, we have a fair value gap here, we have a clear break of structure. Obviously, you don't want to just put in your pending order and then look to buy immediately next week. You always want to see if we can get a decent pullback in a corrective manner, right? We don't want the pullback to come down very sharp. We want this to pull back and correct slowly. Okay, so euro dollar, there's an opportunity to look for a buy going into next week, right? But obviously, you want to monitor how the market is going to continue to develop. If it fulfills those conditions that I cover, that's where a buy trade opportunity will come in. Okay. GBP USD also more or less the same. We're basically neutral now, but with that recent small push, it gives us the belief that we may start to see a little bit more upside from here on. Maybe one more push, okay, to complete another 3-wave cycle here, right? So some sort of an ABC. But of course, this one here, again, if you go down to the lower time frame, okay, we have some clear fair value gap, but we really do not have an obvious break of structure yet, right? Because this point here would be our clear break of structure point, okay, but you can see that price hasn't really take out that high, right? It hasn't really break and close above this high. So the confirmation is for price to break and close above, then any pullback would start to give us that buy trade opportunity. Okay, so it's still a very early sign, but potentially building something out here, right? So GBP USD, we are also expecting a little bit of an upside here. Okay, but ideally we want to see some sort of a confirmation from the market, then we can take this to the upside, right? And if that's going to be the case, okay, this can actually print in a pretty neat channel structure that price may be developing, right? So do keep an eye on, which means that the dollar may continue to weaken, right? Where euro dollar and the pound dollar here would probably see a little bit more upside. Speaking of that, Aussie dollar here is also potentially giving us an upside opportunity. Okay, we are seeing a little bit of a crawl structure development, and of course, RSI here also prints a very clear divergence. Okay, so short term we are expecting some sort of a pullback. Okay, the confirmation level that I would love to see price take out is this swing high at 6,550. Okay, 6,550. If price can break 6,550 with momentum to the upside, then the pullback would give us a buy trade opportunity to target the zone. Okay, so most of the majors seems to be suggesting that we may see the dollar weakness a little bit more. Okay, and that itself starts to present us with trade opportunities that we can really look into. Right? So the major pairs I think is quite clear in terms of euro dollar, pound dollar, as well as Aussie dollar. Now dollar Canadian, I'm a little bit on a neutral fence here because the overall analysis doesn't seem to suggest very clear direction. Now the market is still going higher, but it's starting to struggle, that's for sure. Another thing is it's still testing the zone, very honest. Okay, we didn't really get a clear break above it, right? We kind of got a break of that previous structure, but it struggles and then it's tried to break again, but it still didn't really go with momentum. So all this seems to suggest that it's not very clearly it wants to go higher, right? So for that reason, on dollar Canadian, I'm probably gonna just maintain a neutral perspective for now. Okay. Now next Friday we do have the labor market coming in from CAD side of things. That might give us some clarity post event, but that's going to be on Friday itself. So next week outlook on dollar Canadian probably not going to be anything interesting for now. All right, so that's on dollar CAD. The yen pairs, just now I briefly mentioned, from a fundamental point of view, I think is very clear. Okay, you can see the technicals have been coming down very strongly as well. So both the technicals and the fundamentals in terms of the direction moving forward is pretty much aligned. Okay, now if I bring it to the daily time frame on the high time frame itself, it's very clear you want to focus on the downside for the yen pairs. Okay, it has been overextended for sure. Okay, look at where 2013 is ending the year 2040. Sorry, 2023 to 2024. And then of course from 2024 we have been going up all this while up to late last month. Okay, and definitely we are bound for some sort of a decent pullback at this moment. Okay, now is this all it is? No, I don't think so. I think the market would very easily has the chance to come back all the way and retest this area. Okay, but is it gonna be like just straight out coming down all the time? Definitely not. Right, the market is gonna move in waves. He just managed to take out this trend line structure over here as well. My belief system here is that it will pull back at some point in time, and that pullback will give us that sell opportunity. Okay, so dollar yen here on the high time frame structure perspective is definitely bearish. If you go down to the lower time frame, you want to be a little bit cautious in selling at the low. I would always suggest wait for the pullback before getting involved in any sell. Okay, so for that reason itself, I think you probably just need to be a little bit patient. The pullback can come in towards this area at around 152. Obviously, if you're short term, you can consider some sort of a counter trend trading the retracement. If you are more of a swing trade, then wait for the pullback to complete before you sell. Okay, so dollar yen, that's my take. I think generally the yen, those are the the same thing that I'm gonna have, right? You want to be patient, wait for the pullback, sell the yen pairs, right? Because fundamentally it's very clear. Then we have gold. Okay, gold is a little bit on the neutral side of things as well, because if I zoom in a little bit here to see the details, right? What we have is a pretty nice little 5-way structure, okay, where we expect some sort of a correction, then one more drop. But the pullback seems pretty sharp. Okay, but last week ended with a bearish momentum to the downside as well, and price hasn't really taken out this high. So that starts to lead me to have a little bit of a different point of view, where we may still see a 3-wave cycle that looks something like that, right? So in a way, we have it as a 3-wave structure, right? You can call it A, B, C, or W, X, Y. And then let me just readjust this a little bit. Okay, there's a good possibility we are looking at this cycle here. Okay, so if that's going to be the case, then of course, like short term, will be more inclined to look out for sell trade opportunity, targeting back at 2350 area. Okay, so if this one here, right, gold, if you kind of go down to the lower time frame on the H1, okay, let me just clean up everything. We do actually have a valid setup, right? If you take a look at this, this is a clear break of structure. Okay, we did get a break, and the candle have closed below that, so that's a break of structure. Okay, and the market is starting to pull back, right? So this becomes our swing low. Okay, and of course that's our swing high. We also have very clear fair value gap created here, and we have a order block. Okay, so this is our order block. Okay, so what this means is that if today we can continue to get some decent pullback, if I'm going to pull Fed from swing high to swing low around that 71%, we have a very nice little confluence as well, because the Fed comes into the territory of the order block. We can start to consider a sell trade opportunity. Okay, so going back to a high time frame here, we are riding on the expectation of a 3-wave move to the downside, right? Potentially towards 2350, as I mentioned. Then of course in the short term, we have a valid setup here. Okay, a divergence, cross structure development. Okay, market break the low, wait for the pullback. If you can get the sell, that will be very decent. Okay, now you have multiple targets you can keep an eye on, right? So first one here, we do have the swing low. which is just targeting around 2410. Okay, but of course your stop is pretty tight, right? So that gives you a healthy risk reward of 2. If you're gonna go for the home run trade, right, which is around 2350. Let me just show you another example. If you're gonna target, okay, have another target at 2350, and of course your stop loss is just gonna be about the same. That will give you a risk reward about 1:5, okay, which is very, very decent. All right, so you may have like 2 targets you can look out for, right? TP1 and TP2. Okay, so gold here is definitely one of the closest trade opportunity that you can start paying close attention like as soon as tomorrow, because if you can get a pullback here, and of course as long as price respect the swing high, which means where your stop loss is, there is an opportunity to get that sell side. Okay, so gold is definitely one of the key opportunities you want to pay a little bit more attention as soon as tomorrow. Okay, so that's the closest one. I'm gonna flag this. Okay, then we look at crude oil. Okay, crude oil here initially we were looking at upside, but we didn't really get that impulsive break of that. For the confirmation, the market just keep coming down lower. We haven't really break this low yet. Okay, so this entire view of a 3-wave development is pretty much still valid. But at the same time, I'll shift that perspective a little bit for you. Okay, we can be looking at a WXY cycle 2. Okay, which means if I'm gonna put my channel right, this is something that can be developing too. Right, so if that's gonna be the case, there is definitely more downside that crude oil can establish. Okay, so if that's gonna be the case, will be bearish bias, right? So I'm actually a bit neutral right now because I would love to wait and see how price would develop before really committing to the trade direction itself. Okay, but right now with this impulsive move, we are opening up bearish bias. Okay, we are opening up sell trade opportunity, right? Because if you go down to the lower time frame, it's a very, very clear break of structure. Okay, this swing low is obviously broken. Okay, the whole bearish momentum is definitely there, right? This is definitely an order block. Okay, because we have the market push down, that's a small little pullback, and then another impulsive drop. So that's definitely an order block. If you're gonna pull Fib from swing high to swing low, 71% does come in pretty nicely with a confluence there as well. So this can actually build in an opportunity to look for the sell as well. Okay, very, very similar to gold, I would say. Both of these are commodities in general. You may want to take note of your risk exposure if you're going to be trading both. Okay. Yeah, so I hope this is clear. Good. Yeah, so that's on crude oil, right? So crude oil here has huge downside opportunity as well. Potentially you want to keep an eye on this trade idea. Okay. Then we look at S&P. So S&P has been more or less in line with what we have been expecting. Okay, we're kind of expecting the pullback here, right? So last week we did manage to get it. Price is getting very, very close to our target area. Okay, around 5285. And of course, this 5285 area, if you look left, kind of confluence with where the period structure is as well. So my personal take is, if you don't have a sell, maybe it's not a good idea to be selling it now. because it's already so close to a key area where we may get a bounce back up, right? So this one here, I will continue to expect a little bit more downside, but potentially there won't be any sell opportunity that we can really capitalize on. Okay. Yeah, so this one here, probably just gonna be, just monitoring, and that's about it. Okay. Yeah, so the yen pairs, as I mentioned, the momentum is still pretty much going down. You don't want to be selling at a low, so really nothing much that we can really do about it. You just want to wait for the market to eventually pull back before you get involved in the sell. Now, if you take a look at the daily, where can potentially the pound yen go, right? I think it's huge to the downside. You look at how extended this market is. Okay, I mean, if you take from this swing point here, it's also overly extended, right? If you take Fibonacci from swing low to swing high, we just mark out that 50% mark. Okay, we still have a lot of downside, right? Towards 178.7 area, right? We're trading around 187.5. So definitely bearish, right? In the mid to long run, the direction that you want to focus on the yen pairs is definitely downside. Okay, but of course right now you don't want to be selling because the market is at a low point, right? Wait for the pullback before you commit to the sell. Same thing here on Aussie yen. Just wait for the pullback before you sell, right? Again, going up to the high time frame, you can see this is definitely overextended to the upside. We're doing that pullback at the moment. Okay. Pound odd is something that you can keep an eye as well, because there is an opportunity that may present itself. Okay. So this one here I'm bearish, but it's not really the most convicted one. The reason is because this one here is not really breaking with momentum to the downside, right? We kind of get a little bit of a break, but the market seems to be bouncing from where we are right now. Okay, so I'm gonna be a little bit cautious on this, because ideally we want to see a clear break. Okay, then we'll need a pullback. Okay, we did get a break, but it's a very, very small break. We do have a double top. We do have divergence. Overall, I'm expecting some sort of a pullback to the downside, but we'll see. I think this one will probably need to give it a little bit more time first. Okay, so I'm a little bit cautious on this. Okay, to be very honest. We may have better opportunity somewhere else, so maybe the pound odd is not something you want to be really emphasizing and focusing too much, right? I mean, on the lower time frame, that's where you can see, right? We have a break and close. Okay, but after that, we get another divergence here. So we have a divergence here. We have a divergence here. We also managed to break this neckline. So short term, this pullback may happen, right? So it's a bit conflicting at the moment for pound odd. So at best, what I'm gonna do is maybe just wait and look out for better opportunity somewhere else. Okay. EuroCAD, impulsive break to the upside, so probably I need to reset this entire analysis. We actually took out this high, which is a very, very significant high, right? Because that was established back in 2023. We managed to take that out, right? So on the high time frame, you can see that's a pretty crucial area, right? This entire area is crucial. Price impulsively break out of it so far. So if you ask me, probably we want to wait for a pullback, and if you can get a corrective pullback on EuroCAD, there's a very good odds we're gonna see upside. Okay, because we kind of, if you can take out this zone here, you can see how significant this area is, right? If you can take it out with momentum and then a pullback occurs, that's your buy opportunity. Okay. So this probably need to wait again, right? You need to give it really time for the market to develop and prove to us what it wants to do. Okay, so this one here, I'll just keep it aside, see how things goes. Bitcoin, very nice. It's really coming down towards the area of interest. Okay, you definitely don't want to be selling it anymore, but you want to start looking out for buy opportunity. Okay, because the market is coming back towards the key area between the 50 and 618. Previously we were short-term bearish. I mean, moving forward, we probably still expect a little bit more downside, but you don't want to be selling it anymore. Okay, we'll be more keen to look out for opportunities to see if we can buy here. Okay, and of course that will be the expectation of impulse, pullback, a continuation to the upside, right? If I zoom out a little bit, you can see what the market is developing to, right? We have an impulsive move, a 1, 2, 3. We have a small impulsive move. If this pulls back here, there's a good chance we'll likely see an upside move, right? So if you're into cryptocurrencies, BTC here may be a very, very good opportunity to be looking out for buy trade. Okay, once price goes into the territory around 62,000, 62,200 to around 60,200 zone, that's your buy zone, right? Keep close watch on that. Okay. So those are some of the things that I have. If you take a look at some of the global indices, okay, I think generally S&P is coming down, Nasdaq is probably coming down. The Dow Jones as well, right? Very, very neat development. If I can update this a little bit, okay, probably the channel structure wouldn't be too ideal, but you can see the Fibonacci itself really hits it very nicely, right? Market came into that territory. Okay, so we are looking at this perspective, right? The market put in a 3-wave cycle, a pullback in 3-wave cycle. Is this pullback completed? Really hard to say. We really want to see how the market is gonna react off from this zone. If you're gonna build a corrective pullback here, then it opens up more downside, right? Then this would turn into a bigger corrective move before the upside. Now, what can also happen is that this can be done, and if you see an impulsive bounce, then this would be upside from here on, right? So it's not the clearest right now. My suggestion is just give it some time and see how the price is going to react off this key area before committing to that. Okay. The German DAX very nicely coming down to this territory here as well. Right. So we are in a key zone, right, for German DAX. Are we going to see that bounce from here? We might. Okay, we might see that bounce, right? So again, pretty similar to the Dow. Probably just give it some time and see how things would develop. FTSE, okay, FTSE here, how I'm gonna build this in, right? It's probably gonna be looking something like that. Right. So what is the expectation? You can see this is a 1, this is a triangle. The price broke below it and then instantly went up, and then right now kept coming back down, right? So we are looking at it from an angle where this is a 1, 2, 3, reset, and then potentially another move down. Okay. So we are potentially looking for sell trade opportunity as long as price stays below 8415. And of course we get the impulsive move, right? Okay, so this one here, if you're into FTSE, right, it's probably setting up a pretty neat opportunity, even on the lower time frame, right? Because on the lower time frame, you can see what we have. Okay, we have the market having this swing high, this swing low, a little bit of a topish formation. This is a clear neckline. This is a mini neckline. The price took out the mini neckline and took out the main neckline as well. With this pullback here, we have huge fair value gap with order block. That's the area that you want to look up for sell. Okay, so if I put things in, this would be an order block. Okay, that would be a very, very clear break of structure. If you pull Fib from swing high to swing low, we'll have a nice little confluence of the 71% as well. Okay, so the FTSE here if you're interested in this index, there's also a very clear setup that you can look to sell it. Okay. So in a higher time frame, our potential target is around 8,000. I'll just round on a little bit. Okay, so the previous low is around 8,150. Probably not much of a diff here. Okay, but you can see you can have like target 1 and target 2, right? Okay. So the FTSE is actually also pretty nice in terms of like the entire structure development, okay, and the setup building into that. Okay. The Aussie side of things has a major move down here as well. Yeah, this one when you readjust, the internals of it would be this. Okay, so we did get a massive drop, very impulsive. Okay, very similar to the FTSE, but I think the FTSE is a little bit neater in terms of the setup going in, as compared to the Aussie side of things, right? So if you ask me to filter, I would focus a bit more on the FTSE side. Okay, we didn't really get that fifth touch there, but nonetheless, it's still a decent sell direction. Okay. Yeah, this one probably not too much. Okay, I wouldn't focus too much. So among the global index, I would say my confidence on the FTSE is the best. I think the overall structure and the setup coming into it, is the clearest of all. Okay, so FTSE would probably be the nicest index to be focusing next week. Okay, so we have a couple of things here and there. FX side of things, I think most of it is going to be the major pass because of dollar weakness. But that would need some time for things to build up. Commodities are quite clear going forward into the week. Okay, cryptocurrencies like BTC, again, opportunities are there. And then of course, in terms of global indices, the FTSE, the UK 100 would be one of the better ones to focus on. Okay. So I hope so far so good. Kind of like sharing what I'm looking at, what's the market outlook for next week. Hopefully things are good. Okay, hopefully you guys are taking up some insights out of it. Okay, I very quickly come back to this slide here and share with you a little bit. So again, for those of you who miss out maybe at the very beginning, we are running Sunday streams like today here. For the month of August. Okay, that means every Sunday in the month of August we're running this. The session itself is actually supported and sponsored by PXBT. So if you're very new to this, to them, there's this promotion that's concurrent right now, right? One is trade with 0% commission. The other one is they're doing a deposit bonus. If you're interested to find out a little bit more information to get your personal account registered, this is the QR code that you can scan. It'll directly lead you to the website. Okay, and of course, if you need more information about PXBT, you can either visit their website for customer support, or if you would like to find out a little bit more, you can also contact me. I'll help to direct you to the right person. If you are not able to scan this QR code, I've also included a link in the video description below. For this month, they're running a 50% deposit bonus. If you deposit between $100 to $500, you're gonna get a 50% bonus, right? So give you an example of that is if today you put in $500, you will get an additional 250 credit into your account, right? So in total, you get like 750 that you can actually use to trade. Okay. So once your deposit increase towards 500 and 1,000, you will enjoy 30%. Okay. So if you want to kind of maximize that, you can actually deposit somewhere between 100 to 500 to test it out, right? And at the same time enjoy that 50% deposit bonus. Okay, now so this month itself, on top of the weekly Sunday session that we're running like today, we are also going to be running two special educational webinar. One of it will be touching on Elliott wave principle, how you can use that to establish a directional bias. The other webinar we're going to be doing is on trading strategy, how to utilize the order flow principle to identify setup. And basically what you have seen today in my approaches of the market, how I look at directional bias, how I establish certain setups, these techniques will all be covered in those two sessions that I mentioned, right? So very quickly, I'm gonna drop you the dates which will be running. For those of you interested, do note this down. Okay. Maybe for the benefit of everyone, I'm gonna put this down. Okay. So the first webinar, okay, we'll be running this on the 10th of August. Okay. Which is gonna be a Saturday. Okay, the time of this will be 9 p.m. Okay, again, GMT plus 8, right? So depending on which zone you're in, just factor that in. And then the second webinar, okay, we'll be running it on the 24th of August. It's also a Saturday, and it's going to be the same time, right? So this webinar, the second webinar, will be talking about order flow. Okay, so the title here will be Introduction to Order Flow. It's basically a strategy-based session where we talk about setups. Okay, how to get in, how to identify entry points, exit points, stop out, take stop loss and take profit, etc. The first session over here will be Introduction to Elliott wave. Okay, so this one here is more of like giving you the idea of how to establish a directional bias, and this is basically an analysis framework. Okay, so why this too is because to me the key component in trading is, of course, number one, I identify the high directional bias, high probability direction, right? So you do your analysis to identify the direction to focus. Then once you have done that, you need a setup, right? You need a strategy to get involved in the trade. Okay, so that's where we have these two webinars here to kind of provide you kind of like a complete approach towards the market, right? To perform your analysis, identify the direction, and then have a valid setup to help you take the trades in a proper principles and approaches, right? And how to manage your risk accordingly. Good. So that's all for me for today's session. I hope you guys take away something or two from the session. Next week we're gonna have it similarly as well. So this month, as I mentioned, every Sunday the same time. So do tune in. And of course, if the session that we've conducted over here for today kind of like benefited you, and you know friends who are in trading as well, and you believe that this can actually benefit them, do appreciate if you can also share it out to them. Let them know that we're running this every Sunday for the month of August, and of course these two webinars do help to invite them in as well. Okay, so that's all. All the best for this upcoming week, and I'll see you guys in the other sessions respectively. Okay, so see you guys. Bye bye.